the volatility around the world capital markets continues unabated. The way the US markets are poised has been influencing global markets, including India. The US Fed interest rate hikes are the talk of the town. Based on the US inflation numbers which came out earlier this week, there was a strong feeling in the market that about 100 basis point will be the rate hike. However, some of these statements coming from some of the hardcore conservative Fed members in the recent past have to an extent allayed those fears, and now the talk of the town is about 75 to 80 basis point, which the market is liking. There has been a bit of a recovery from the lows we have seen earlier in the week, and the same sentiment is also being reflected in Indian capital markets. The macro continues to remain volatile with geopolitical tensions continuing unabated. However, apart from the macro, we are seeing excitement as far as the micro side as well. Corporate results are coming out, and some of the results, particularly in sectors where there were cost pressures, are not to the liking of the market. We have seen IT taking a major beating, and the talk now is that the PE compression as far as technology stocks are concerned around the world will start happening. However, the silver lining is on the other pockets like BFSI, consumption. With monsoon progressing reasonably well, we expect that consumption theme and domestic focused companies will gain momentum. That's pretty much getting played out in the market. BFSI did see some correction on the back of FII selling. However, we are believer in BFSI doing well and producing good numbers as well as giving investors good return during the current fiscal. Investors will do well to remain extremely cautious and careful in the market. Selective stock picking in sectors like BFSI as well as consumption probably will do the trick. We like large consumption related companies like HUL. We also like large companies in BFSI, private sector bank, ICICI, public sector, SBI, we like. We also like cement companies. However, investors should remember that right now the cement companies will undergo a little bit of suffering. Last quarter, which is Q1 of the current fiscal, the cost pressures will result in subdued numbers. Q2 monsoon always leads to demand compression. However, Q3 onwards, we expect cement companies to give good returns. So investors should take opportunity of correction in prices in cement companies and start picking up those stocks. Ultratech continues to be our favorite pick in that space. Overall, we would advise caution. Slow and steady picking up of stocks for building portfolio for the long run is advised. Thank you.